Hi, Jonathan York, Bay Financial Partners, looking at the investment markets. Earnings season is now sort of well underway in the US, and so far it's been pretty encouraging. Although in the next week or so we get the big tech reports, that's going to be just very interesting to see how that sort of plays out. Because obviously, a lot's been said of the Magnificent Seven that's really been driving the US equity market over the last year or so. But again, some encouraging news on the US economy. The latest Philly Fed survey was up, came in at 13.9. It was expected to be around sort of 2.9. For the US economy, because certainly it's performed pretty well over the last sort of 18 months when a lot of economists and analysts were predicting a pretty major recession. Term rates holding in the US, 10-year is 424 and the 2 years just below 450 at 448. Now, obviously, the big news in the US on the political front has been President Biden saying that he would not now seek re-election. That's come after a pretty disastrous debate and sort of major sort of stumblings in a couple of speeches. Now it looks like Kamala Harris, the current VP, will now be the Democratic nomination. That's going to be very interesting to see how that sort of plays through, because certainly after it was announced that Biden was pulling out and he was endorsing Kamala Harris, funds started flowing in for the Democratic Party. So now it's just going to be pretty interesting to see how the sort of convention goes in Chicago in sort of mid-August. But at present, it looks like it could be a pretty tight race. Kamala Harris certainly gains quite a reasonable bit of support out there, and it'll just be very interesting to see how the demographics play out. Now, oil's backed off pretty dramatically, well below $80 now, currently trading around 77.30 and change. Now, that's obviously good for the global inflationary implications. Now, so far, the reaction to the new Labour government in the UK has been pretty positive out there. You've got inflation that's well under control, just around that sort of 2% level. You've got wage inflation that is falling and taking pressure out of the labour market, and potentially looking at a rate cut now for the Bank of England in August. But more importantly, the market seems to be liking what the new government is sort of putting forward in terms of policies. Now, in the EU, there was no rate cut at the last ECB meeting. You've got the Paris Olympics starting in the next sort of day or so, and that's just going to be interesting to see what sort of boost that gives to the French economy, and then sort of wider European economy. Because certainly for the French economy, there will be a mass influx of sort of tourists and obviously athletes and competitors, and that should give a pretty reasonable boost to the French economy. Although obviously they've still got to sort out a government. Now in Australia, the latest jobs data coming out for June was an increase of 50,000 jobs created. That's a big increase. The market was expecting around sort of 20,000. So again, positive news on the job front. That should be positive news for the economy, because obviously if people are in work, they're being paid, they're paying their mortgages, got money to spend, etc., etc. But what will the Reserve Bank do at its next meeting? Especially after that increased CPI data that was 4%, will we see a further hike from the Reserve Bank of Australia? Now here in New Zealand, obviously the latest CPI data was pretty encouraging at 3.3. That's well down from the 4% from the previous quarter. And potentially looking at a rate cut now. It should really come probably in September, but so when will we see a rate cut here in New Zealand? Probably have to wait to see the Fed move first. They're expected to move in September. If that is the case, and the Reserve Bank's probably move in October and possibly November as well. Now, a little bit of buyout news out there in the New Zealand share market. You got Avida with an offer in there from an alternative equity company coming in at $1.70 for the shares. That's a pretty big increase, but interestingly, it's around sort of 15% below the sort of current net asset value. But interestingly, the board recommends that unanimously acceptance of the offer. But it is subject to regulatory approval. Also, offer out there for the warehouse shares from Sir Stephen Tindall. It'll just be interesting to see how that sort of plays through. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. I'm looking forward to speaking to you soon.